Hey, you guys, I just wanted to do kind of a quick public service announcement, and that is check your interest rates on your statements. If you have not started velocity banking yet, and you feel like the squeeze is on you, that is because the rates are increasing. Now, we've all kind of heard in passing that the feds have raised rates, and you're like, I don't really know what that means. Well, it means that you're getting the squeeze on mortgages, you're getting the squeeze on credit cards. When the banks are in trouble, they come after us. So just be aware if you are waiting on getting your velocity banking strategy started. Uh, the rates are impacting you right now. And so I just want to kind of show you this particular card. This is the one I use in my money tracker videos. I got this card 7 years ago when I got divorced, and the limit on it was like $500. And the rate, I was fully aware that the rate was 29.99%. And so I thought, no problem. I'm not going to carry a balance. I'm going to pay it off, and I'm never going to have to see that interest. But obviously, life happens and limits increase, and life happens some more. And then now you're carrying a balance of 29.99. But I had it in my head that there was a threshold and maybe even a law where they capped it and you couldn't go over that 29.99. Well, that is not true. So there is actually no federal law that limits the rate that a credit card company can charge you. And if you have a variable rate, like you see the little V where my interest rate is there, if you have like a little V on your statement, that means they don't even have to notify you that they're raising your rate. So I completely understand. I borrowed money I did not have. They gave me money. They fronted me the money I did not have. And I was totally okay with 29.99%. But I think once you cross that 30, like that's a little ridiculous to me. And to know that there is no limit, that's kind of scary. So I just wanted to let you guys know, if you are on the fence, just start looking at your statements because they're creeping. They're creeping into your pockets. And also, when they lower your minimum payment. So I just wanted to show you this. So my minimum at the beginning of June was 305 and my interest was 101. So 204, when I was making that minimum payment, $204 was coming off my balance, right? Every month when I was paying it the traditional way. Well, they've since lowered, since I've been paying this down, they've since lowered my minimum payment. You don't ever want to get stuck, and when you're doing velocity banking, you won't, but still, for those of you who haven't started yet, you don't want to get stuck and think, oh, that's a gift that they've lowered that minimum payment, because all that's doing is stalling your payoff. Okay. So before I had $204 coming off. Now it's $80.44. So I'm completely ignoring that. I'm again with velocity banking, throwing my income at that card so that it pays it off very quickly. Also, I want to point out, if you are a military service member in the United States, there is the Military Lending Act and the Service Members Civil Relief Act. So I don't know how it applies to retirees, but if you are active duty, or say you have a kid who's active duty, and if they're having trouble with credit cards, you might want to have them take a look at that, because there are caps for service members. There is help for service members with their credit cards. Oh, that's my mom, y'all. I gotta go. Bye.